Welcome back to the Daily Hunts from Multibaggers, airing on this crisp Saturday, October 18th, 2025. We're digging into the data from Friday, October 17th, bringing you the latest buzz from the community forums.
And what a mixed bag it was, Ethan. We saw a good number of posts flagging several different stocks yesterday. There's certainly a strong sense of optimism around some names, but also a healthy dose of skepticism when we looked at the underlying numbers. It's definitely a day for balancing enthusiasm with cold, hard facts.
Absolutely, Brooke. Let's dive right into our first candidate, Gap Inc., GAP. Now, the community sentiment on this one was very interesting. There was some incredible conviction, even from folks who'd been holding through significant drawdowns. One user, mentioned averaging down their position during a big dip and then celebrating a quick rebound. We saw comments about demand being insane, and the brand just got super popular thanks to 100 times more effective advertising campaigns. People are really looking forward to the next earnings report, with some even predicting it could hit the $30 range.
Well, Ethan, that level of enthusiasm is certainly contagious, and you can see why with the story of a turnaround. But when I peel back those layers of anecdotal evidence and look at the actual KPIs for GAP, a few red flags popped up. While the low PE ratio of 9.31 and a decent ROE of 28% might suggest undervaluation and efficient management, the most critical number is that revenue growth is virtually flat at 0.01. That directly contradicts the claims of massive growth and insane demand if we're talking about reported figures.
But the community believes these recent campaigns are future growth drivers, Brooke. They're seeing the surge in foot traffic and online sellouts as leading indicators. There's also talk of institutional interest, with massive call option volumes being interpreted as a whale buying in. Plus, they've been diversifying their supply chain away from China, mitigating some of those geopolitical risks, which is a smart move.
Diversification is good, I agree. However, the debt-to-equity ratio of 162.89 is very high, signaling significant financial leverage and increased risk, which the community discussions largely overlook. And while the stock is volatile with a beta of 2.0, confirming it could send this flying, it also means it could drop sharply. Previously, we've rated Gap as stay away multiple times, including on September 25th and October 2nd. Given the continued disconnect between the strong anecdotal optimism and the stagnant revenue growth coupled with high debt, I don't see enough fundamental improvement to upgrade our stance.
I hear ya. The community's conviction is strong, but those numbers are hard to ignore. For Gap Inc., GAP, our AI-generated analysis leans towards a stay away for now, despite the positive buzz.
Next up, let's talk about Opendoor Technologies. This one was quite a saga on the forums. The original post was about an unlimited buying power play, suggesting massive gains.
Yeah, the original poster had a very aggressive, highly leveraged strategy, betting big if Open moons. They had some serious conviction in their plan.
Well, that conviction was met with some equally serious skepticism, Ethan. The community sentiment was overwhelmingly bearish, pointing to very significant risks. Users highlighted that Open is a money-losing stock and could easily go bust. Our KPIs really back this up. A negative net profit margin of negative 0.0588 and negative EPS of negative 0.43. This is not a company making money, plain and simple.
Right, and the community also noted the stock's extreme volatility, with comments about it potentially returning to its 80-cent or $1 lows.
Exactly. And adding to that concern is an extremely high debt-to-equity of 346.17. That's a massive reliance on debt, which when combined with unprofitability spells out high financial risk. Plus, the beta is 3.596, indicating extreme volatility. While some investors chase high beta, for a company with such weak fundamentals, it usually means amplified downside risk. We've consistently rated Open as stay away in past episodes, including on September 25th, October 1st, 4th, 7th, 8th, 9th, and 14th.
Yeah, it's clear the community and the KPIs are aligned here. For Opendoor Technologies, our analysis indicates a strong stay away.
And finally, we have IonQ. This quantum computing play generated a lot of discussion, particularly around news of shareholders planning to sell 25.3 million shares.
The quantum computing space is definitely exciting, with huge long-term potential. But the news of this massive shareholder sale certainly raised some eyebrows in the community.
Raised some eyebrows is an understatement, Ethan. Users were overwhelmingly bearish, calling it vaporware and a scam. The sentiment was that the market cap, which is approximately $21.87 billion, is absurdly high when you consider their net profit margin is zero and EPS is negative 2.06. They're just not profitable. The price-to-book ratio is also a staggering 14.6, suggesting a massive overvaluation that isn't justified by current assets or performance.
So the community sees the insider selling as a major red flag, implying those closest to the company might be losing confidence.
Precisely. It's interpreted as a signal of waning confidence, and the KPIs really reinforce that concern. Negative ROE, negative ROA, significant operating losses. It all points to a company burning cash with a valuation that's detached from its current financial reality. We've rated IonQ on October 7th and 10th. There's nothing here to change that.
All right then. For IonQ, our AI-generated insights lead us to a definitive stay away.
Investigate as buy. None. Investigate as cautious buy. None. Investigate as speculative gamble. Gap Inc., GAP.
Just a quick reminder to our listeners, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice.
That's right. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for joining us on the Daily Hunt for Multi-Baggers.
We'll catch you next time.